All right. I'll tell you what, son. Um, what's up, guys? What's up? Welcome back to Stock Talk with Brock. Your man, the one and only, the legend, Rocky Boy. All right, today we are going over how to break down an income statement, right? So, I'm not gonna get too crazy, not too in depth with it, but I want you guys to at least know what you're looking at. Because when you first look at it, you're like, "Whoa, what the heck?" You know, a bunch of freaking numbers and kind of looks like an Excel sheet, kind of, and it can be a little confusing. And you don't need to know all of it. Not for trying to find good growth stocks or just good stocks in general. So, but we're gonna break it down. All right, so let's get in it. Breaking down and understanding an income statement. That's what we do. What is an income statement? The income statement shows a company's performance over a specific time, usually a quarter or a year. It's also known as the profit and loss statement. All right. And you can break it down yearly or quarterly. I think it's going to be broke down yearly though. All right. Here's a screenshot of one. This is just a portion of one. This one here happens to be NVIDIA. But this is what's really going to look like, okay, guys? And depending on who you're getting the income statement through, it might look slightly different, but it ain't going to look much different, okay? Now, TTM, remember, guys, that stands for trailing 12 months, okay? So within the last 12 months. And then see how it says 148,000? This doesn't mean 148,000, okay, guys? It depends on the company, right? So this is NVIDIA, so this is going to be in the billions. So that's 148 billion dollars, all right? Not 148 million, not 148,000, okay? It's 148 billion dollars. Keep it moving. Section 2, step-by-step breakdown. All right, guys, you've been hearing this one a lot here lately, drilling this into your head. This is the top line. Let me take my gum out because that's rude, right? Sorry, it's nicotine gum. I quit vaping, and it's my first day, so hopefully I quit. But I've went all day without vaping, and I've been chewing the shit out of this nicotine gum. But hey, you know, it works. Top line growth. Top line revenue, okay? Cost of goods sold, COGS. This is what it costs the company to produce whatever it sells. It includes materials, labor, and manufacturing costs. All right. Gross profit, revenue minus COGS. So revenue minus cost of goods sold. It shows how much money is left after making the product, but before operating costs. Over here. Operating expenses continued. Operating expenses. These include research and development, marketing, admin salaries, basically everything it takes to run the business, guys. Okay. Operating income. This is your earnings before the interest and taxes. It's a huge one because it tells you what the core business is earning before the financial stuff kicks in. All right, let's repeat that one. This is your earnings before interest and taxes because it tells you what the core business is earning before the financial stuff kicks in. All right. Interest and taxes. These are costs of borrowing money and paying Uncle Sam, right? Net income, bottom line. Another one we've been talking a lot about here lately, guys. This is the breadwinner. This is the one that means the most, right? Your bottom line. When you are watching earnings, like Google just had earnings the other day, they freaking knocked the bottom line out of this park. Not only did they knock the bottom line out of the park, but come to find out, the search engine isn't pulling back nowhere near as much as they thought it was. It actually increased a little bit. Now, it is going to pull back though, guys. So don't let that confuse you if you are paying attention to earnings, Google's earnings. Just because AI, everybody's kind of moving over to AI. I mean, even me, I got ChatGPT, I got Google, I got Meta AI, and I got a couple other ones. I still use search though, right? I still use search. There's still a place for it, and Google's still going to come out on top. I don't know how, but they will come out as one of the winners, so I'm not too worried about it. All right, section 3. What growth investors look for? Consistent revenue growth, rising earnings per share over time. That's your bottom line, EPS, earnings per share. Anyhow, healthy margins, especially gross and operating. Positive net income, even for smaller companies starting to scale. We want the revenue growth is going to be more than consistent for growth stocks, right? It's going to be it should be growing 20% or more a year. Okay, guys, that's what we are looking for. All right. In summary, a growth investor analyzes an income statement and prioritizes strong and accelerating revenue growth. Okay. So if we see a company and let's say it's a software company, okay, and let's say they're just starting out, all right, it's a software company, and so let's say the first 3 years, their revenue, they grow 4%, all right, and then the second year they grow 12%, right, and then next you know, the third year, let's say they grow 30%, right? And they just you'll see that huge gap, and you'll be like, whoa, okay, let me keep an eye on this one. Something happened that year. Let's see if they can repeat it. So if the next year comes up and they grow another 30 or more percent on revenue, all right, now you know you're kind of onto something. So you're like, okay, this one's taking off, right? You dig a little deeper on that company or whatever, and you see what they got in the pipeline, what they got going on in the future. You see why their software is in high demand, and you get an overall picture of why it's happening and why everybody is kind of piling in and why they're selling their products so easily, right? And then you got to determine whether you think they can keep that up or not. Scalability demonstrated by operating income growing faster than revenue, a path towards significant net income growth, understanding potential reinvestment, consistent and ideally accelerating earnings per share growth. That's a big one right there. They look for trends and the underlying drivers of these figures to assess the company's potential for future high growth. That's what I just went over, right? So they look for trends and the underlying drivers of these figures. So you're looking, if they are starting to knock out revenue and they're starting to knock out the bottom line, and I mean, they're just beating them like crazy, and they're growing 50-60%. You know that company is in a growth spurt, right? Like it's in its growth stage. And so now it's your job to research that company and figure out why is it growing that fast, right? Why is it in such high demand? And once you can figure out the why, then it just makes it all comes together, right? All right. All right, so let's go over here and just show you what it really looks like, okay? This is NVIDIA right here, okay? Get my beautiful face out of the way, okay? This is Seeking Alpha. This is an income statement, right? See here, income statement. We're gonna go over the balance sheet. That's gonna be our next video, but this is the income statement, okay? This is NVIDIA, okay? And we're going to, so you see, this is revenue, all right? So January 2020, they brought in 10 billion, almost 11 billion in total, right? That's with everything. That's not counting anything taken out. That's just everything. So they brought in almost 11 billion, and then next year, 16 and a half billion. So, um, what is that? Whoa. So 16, so six. That's like, it's like 60% or something like that. If I'm doing the math right. All right, correct me if I'm wrong, but so that's a 60% increase, guys. That's insane. Okay. And then it went to 26 billion, almost 27 billion. And then they had a little snag here. I'm not sure what happened. But that'd be something like you would like look into to see if you think they're gonna start. Let's say you couldn't see all this right here, and all you seen was this, and that was last year's. You're gonna be like, dang, what's going on? Why'd the growth stop? And then you dig a little deeper, you might find out it just was for some bullshit, right? Maybe I don't know, they didn't have a new chip coming out that year or something, so everybody was still buying the old chip, and everybody was probably waiting for the 2023 chip to come out, or the 2024, I mean, chip to come out. And let's say the 2024 chip came out, and then things picked right back up. So you can see they literally doubled. That's 100%, right? That's over 100% growth right there, guys. 26 billion to 60 billion. So that's how you break this down, guys. That's how you look at this. All right. And then if you come down here to net income, that's going to be your bottom line, guys. All right. Your bottom line is right here, net income. This is how much money did they get to keep? How much money did they get to pocket out of paying all their bills? Okay. So you can see again, almost 3 billion, and then it jumped up to over 4 billion, then it jumped up to 9 billion, and then it looks like they had that. This is where that snag was. Okay, so this could have been because like I said, this is after all the bills and stuff were paid, so this might have been a huge bill they paid, and that's why they weren't able to pocket some of that profit, or a lot of that profit. But then if you look the next year after, you can see where it just picked right back up, and so you can see we're 29,000, and then 2 years ago it was almost 10,000. So you can see where it's what's that, almost 150% it grew. Okay, guys. So and I hope I'm doing my math in my head right on this, but yeah, I know I'm pretty close. So anyhow, yeah, and then you would just you go through here, and you break down whatever else you want to do. Yeah, but this is what an income statement looks like, guys, and this is what you would just kind of go through, and see, this is research and development, so it tells you how much they're spending on capex, basically, right? So capex is like was what, how much are they spending on research, right? So you can break that down, and you can see how you know where's that slow year at? 2023, is that the slow year? Yeah, 2023 is the slow year. So you can see in 2023, they still spent quite a bit on research and development still. So, but these numbers, you don't want these numbers too crazy, depending on what they're doing. But like for Meta right now, Meta is poaching a bunch of, Mark Zuckerberg is poaching some of the best minds for AI right now, and they just poached some of Google's people, and then I think they're trying to get some of Microsoft, and they're trying to get some of Sam Altman's people from OpenAI, and he just hired somebody, some brains of the operation. I think he stole from Google and gave him I want to say $100 million sign-on bonus. So, like he's not scared to spend that money in the right places, because he knows it's going to turn profit, right? It's going to keep him in the race, right? And it's going to keep him in the front of the race at that as a company. And Mark Zuckerberg, he's a founder, and usually a founder CEO is like one of the best type of CEOs to have, because that business is their baby, right? That's their baby. So they're really going to take care of it, and they're really just going to be in tune and know how things are ran and how they should be ran and where they want to take the company. And so if you see a company, if you're doing a research in researching a company and you find out the CEO is also the founder of that company, that's usually a really good sign. And that company is usually going to be a well-ran and successful company. Usually, not always, but usually. So anyhow, we broke it down a little bit, guys. This is an income statement. It's not nothing too crazy. I hope y'all could stand it. And yeah, so and then let's just check. Okay, bam. So this is the public account, guys. We've only been in these positions what, a week, and so Adobe. We're up $23 on Adobe. We're up $100 on Elf. We're up $133 on Google. We're up $101 on Palo Alto. We're up $80 on T-Mobile. We're up $35 on Toll Brothers, and we're down 43 on Tesla. I'm probably going to add to Tesla, no lie, right? I'm probably going to add to Tesla since it's pulling back. They bombed on earnings the other day. We knew that was going to happen. They're probably going to bomb on the next earnings as well, and then things will hopefully start to pick back up second half of 2026. But as long as Elon is back at Tesla, back in the actual factory and on the floor and doing his thing, I'm pretty confident in Tesla and what they can do, right? Like Elon is anytime people doubt him, like he's like, okay, watch me, right? So I'm just a big fan of Elon, to be honest, and he's he works his ass off, and he's one of the most brilliant people in the world, and he's got all the most successful companies in the world, and I just think 2 years from now Tesla's going to look insane. It really is. With Optimus in the near future, eventually every house will have a robot in their home, and that robot will be doing the dishes and mowing the lawn and folding the laundry and whatever else, walking the dog. And then the robo taxis, that's already happening in Austin and a couple other cities, and this time next year it'll probably be in over 50% of the United States, and then a couple years from now there'll probably be Tesla robo taxis in every state. And then what you'll be able to do is you'll be able to order a Tesla straight from the factory. It will drive from the factory to your house and deliver itself. And then when you're at work or at home or you're just not using it, you'll be able to send that car out and make money for you by ride sharing. It'll go out and pick people up and take them where they want to go, and it'll get paid, and then it'll come home and give you the money. And so we're moving into a crazy and interesting world, and Tesla is leading that charge. So yeah, I'm really excited, and I won't even worry about this. If it goes down, I'm just going to pick up shares on the way down, guys. So that's how I look at it. And I think it's going to pay us off in the end. All right, we might have to wait a little while. Might take it, 6 months to a year, but you're going to be, this isn't financial advice. This is all what I do, but I'm pretty sure I'm going to be looking pretty healthy. All right, pretty healthy and pretty excited a couple years from now. So anyhow, if you like this, got something out of this, okay, follow your guy, Stock Talk with Brock, subscribe, and y'all have a wonderful, freaking awesome evening.